and welcome to an introduction to annual accounts and independent examinations for small charities. We are going to very briefly look at some of the key queries that we have around annual accounts and independent examinations. We're going to look at the difference between receipts and payments accounts and accruals-based accounts. There are two different types of accounts. You can prepare your accounts on two different accounting bases, and we'll touch on those. We're going to look at the role of the charity SORP, which is the accounting rulebook, and signposts to the Charity Commission templates for the annual accounts. They're super helpful. We will look at some of the considerations when choosing an independent examiner. There are nearly 200,000 charities registered on the commissions in England and Wales, Scotland and Northern Ireland, and this guidance is written. The guidance is written for all of them, and so today is 1 or 2 stars in that universe. Always, especially with these compliance issues, go back to the primary guidance, seek proper professional advice for the avoidance of doubt. This is not that. There are 2 consultations in play this year, one on the charity SORP, the accounting rules, and one on thresholds, who does what basically. At the time of recording and delivering these sessions in this autumn term, neither has come out with the final update. So watch the Charity Commission closely for updates. And if you want details to the 2 consultations, they are there. Broadly speaking, trustees of charities at year end need to have 3 things on their to-do list. They need to prepare a set of a trustees report and accounts. They need to get it externally scrutinised, and then they need to file the trustees annual report and accounts with the independent examiner's letter as they file the annual return, and this will make their annual return information and their annual accounts publicly available on the Charity Commission register. So we're going to start with the trustees annual report and accounts. This is 2 documents in one, right? So you've got the narrative at the beginning, the trustees annual report, and then you've got the financial statements, the annual accounts at the end, but they form one document. When we get them independently examined, the examiner is reviewing both as one combined document. The trustees annual report follows a set format. It's a really important bit of our financial storytelling. We really recommend paying particular attention to what you are writing in the financial review section and the reserves policy. We are all telling a story. Make sure it's the one you want to be telling. And we need to update both of these every year. I wouldn't go for a boilerplate that never changes. We want to be communicating with our audience, and the primary reader of accounts, I understand, is funders. We want to be communicating with them that we're on top of the numbers, we're on top of the financial management, we're on top of the financial stewardship and planning. And if you want an example of a financial review and a reserves policy, this is taken from the Charity Commission for England and Wales, their example accounts for a charitable company. And it's a really lovely bit of financial storytelling. You can't tell much from this screen. I've shrunk it down just to show you what it's like. But go and look up the example accounts, read through them, read the financial review and reserves policy, benchmark yours against it. And that's all we're saying on the trustees annual report for now. The annual accounts, that's the financial statements bit at the end. Now they need to be prepared on one of 2 bases, and which really is determined by our annual income and our constitution. And those 2 bases are either we do it on a receipts and payments basis, or we do it on an accruals basis. And a receipts and payments basis is really a simpler version of accounts preparation. It's based on cash in and cash out, and most financially literate folks can prepare receipts and payments accounts without too much bother. Happily, the Charity Commission has templates and guidance notes for those of us that might get a bit stuck. And you recognise the cash as it comes into the bank and as it leaves the bank. It really is that simple. Accruals accounts are not simple. They are more complicated. They need to follow the charity's statement of recommended practice, the charity's SORP, and they are prepared on an accruals basis, which means that we don't just include cash in and out. We do that plus any income we've earned in the year that hasn't hit our bank yet, and any expenses we've incurred in the year that hasn't gone out of our bank yet. And so it's really aiming to show a true financial performance over that financial year. We recommend that you just get a charity accountant to do accruals accounts, and get a good charity accountant. High street accountants are wonderful. No shade on those, but you want someone that really knows the charity's SORP and can explain to you what the accounting treatment is of the individual grants and contracts and things like that in your particular numbers. A simple example of the charity SORP is the income recognition test. We don't recognise income simply when it's hit the bank, as we do in a receipts and payments account. What we do is recognise the income when it satisfies 3 tests: entitlement, measurement and probability. And that often means that a grant can be recognised in full even if it hasn't been received yet. And so these complexities can really create this shroud of confusion over the numbers. Get a charity accountant, ask the questions: what have you included, what have you not included, and why? And critically, what does that then mean for our budgeting for next year? What we need to prepare when we need to prepare receipts and payments accounts and accruals accounts, it is dependent on the jurisdiction that we're in, whether we're in England, Wales, Scotland or Northern Ireland, and the rules are here. But broadly speaking, for England and Wales, which is where most of our community is, receipts and payments account, if you're a non-company charity and it is allowed in your governing document, you can prepare really simple receipts and payments accounts until your income hits 250,000, after which you have to go to accruals accounts. And if you're a charitable company, it's accruals accounts all the way. As I said, there is a consultation out. These thresholds hopefully will go up, but we will see. So with receipts and payments accounts, folks, there are 2 sections. There is statement A, which is saying what's come in and what's gone out. And then there's statement B, which is a statement of assets and liabilities at the end of the period. And so the total funds on statement A should be the same as the total cash on statement B. And we often see it in Braid's Finance when things have gone a bit pear-shaped, and that isn't the case. So always make sure you're checking. And statement B also includes any assets that we own or any liabilities, any debts that we have. The statements are signed off by a trustee on behalf of all trustees. So I really invite you to get curious, get into the numbers and make sure you're happy with them. This is a template. It looks like this. You can have your income and expenditure account straight from your bookkeeping system, which is really helpful. You can, use the Ronseal approach. It does what it says on the tin. This was rent, this was heat, this was light. You have receipts at the top, then payments, and then opening and closing balances. It's too small to see on a screen. I would invite you to go and download it, open it up and have a good look. You can see that going across the page, we've got the columns that we have when we're doing budgeting, bookkeeping, management accounting to track funds, unrestricted and restricted funds. And then this is section B, which is that statement of assets, things we own, and liabilities, things we owe out. Accruals accounts are more complicated. There's a set format which has to follow the charity's SORP. You've got the statement of financial activities, or the SOFA as it's commonly called, which is the analysis of income and expenditure over the period, and a balance sheet, which is a snapshot on one day of time of what the last day of the financial year of what we own and what we owe out. And accruals accounts will also have a cash flow statement and lots of notes in the accounts. Now, it's the trustees that have responsibility for the account, but the actual preparation can be outsourced, although trustees always remain responsible. And so just make sure you've got the proper accounting records, keep a really good bookkeeping system, keep a really good paperwork, digital or otherwise system, so that at come year ends, it's really quite simple and easy for someone to turn that into a set of SORT compliant accounts. That means tracking income and expenditure on grants and unrestricted funds throughout the year on a transaction by transaction basis, and we cover that a bit in bookkeeping session. So an example of accruals account, say a charity is awarded a grant of 50,000 in April, but the funds are paid in 2 instalments, half in April, half in September. Under receipts and payments, the grant would be recognised when it's received. So if your financial year covers both of those instalments, you'll recognise them both. Under accruals accounts, the grant is income is recognised when the charity is entitled to the money. And so if it's met the criteria, it would be recognised in full, even if the second instalment hasn't been received. And this often throws people. It's not terribly helpful, but we are where we are. Again, always get a really good, lovely, friendly accountant who's going to be able to explain to you, and then your comfort zone will stretch, your understanding will stretch. And this is an example of a statement of financial activities. Again, we've got the income and expenditure codes, but not the natural classification. We don't say rent, heat, light on the sofa. There are set headings, governance, charitable activities, etc., etc. We also have the columns going across: unrestricted, restricted, total funds. And the box at the bottom in green would be the total funds that this charity holds. That number we then see on the balance sheet. The sofa tells us what's come in and what's gone out, what we started with and what we ended with. The balance sheet tells us what we ended with, where it is. The top half of the balance sheet tells us whether it's in assets or liabilities. Assets are things we own, liabilities are things we owe. And the bottom half of the balance sheet tells us where it is in terms of funds. And so key questions to ask: how much do we have in income? Where does it come from? How much did we have in expenditure? Where did it go? What is left in our restricted fund? What is that for? Is it an underspend? Do we need to give it back? Is it to be carried forward to next year? Normally, restricted surpluses and deficits are down to timing. The income's come in before the money's gone out. And what is left in unrestricted funds, and is this enough? If it's all liquid, it's going to be our reserve. Is it within our reserve range, within our reserve policy? And how are we doing compared to last year? Now, sometimes as we grow, we need to change from doing receipts and payments accounts to accruals accounts. And there's a great ACCA guidance note. You can go to our resources page, the charity finance list, and there's a link on there, or just, Google it, I guess. Once we've prepared the accounts, we need to get some external scrutiny, whether we've got receipts and payments or accruals. Providing our annual income is over 25,000 a year, we need to get them independently verified. And smaller organisations can have a lighter touch verification or scrutiny with an independent examination. Larger organisations would have a heavier, deeper, more intensive scrutiny with an audit. Now, an independent examination is a light touch, and it really says the numbers match what's happening in the real world. An audit is a more detailed scrutiny, and it's given a formal opinion on the accounts. It's saying, in our view, the accounts give a true and fair view of the financial position of the organisation. An audit takes longer. There's more substantive testing of the transactions, of the systems, of the controls, and it's generally more expensive and more time intensive. Broadly speaking, and again, it changes depending where we are, and you will go back to the primary guidance in each jurisdiction, but for England and Wales, if your income at the moment is over £1 million, or the gross assets are over 3.2 million and income is over 250,000, we have an audit. If income is under £1 million, we have an independent examination. And the qualification status of required of independent examiners changes whether you're really small or a bigger small charity, and we'll look at that in a second. And as we said at the beginning, the thresholds are changing. So at the moment, income over 250 and smaller asset base 200, that's an audit. Income under 250, that's an independent examination. And what does that look like? Well, it's really about getting an understanding of the charity. So normally you'd have a conversation, a meeting before the examination goes ahead, where the independent examiner will ask you about your charity, your activities, what it is you're trying to achieve, your business model, your income and expenditure profile. They're making sure the accounts are consistent with any of your financial records and that you haven't misstated anything. And they're probably making sure that the accounting records are properly kept. And they'll do a range of compliance checks, and they'll look at the annual report. And if you want to know more about it, I would look at CC 31. It's guidance for trustees on independent examinations. If your charity is over 250,000 and you are having an independent examination, then it needs to be someone who's listed in one of the accountancy bodies listed in CC 31. So you need someone with a professional membership of one of the recognised accountancy bodies. If the income's under 250, you don't need to have someone that's listed on one of the accountancy bodies, but they do need to have a good understanding of accounting principles and the charity SORP. And that's if you're doing accruals accounts. If your income's 250 or less and your charity prepares receipts and payments, they also don't need to be a member of an accountancy body. They do need sufficient financial awareness to be able to do the work, but I can't imagine anyone saying yes to it unless they feel confident. But quite often you might get bank managers and people in financial services industries and things like that. In all cases, does what it says on the tin. The clue is in the name. They need to be independent, and so you can't have someone doing your bookkeeping, accounting, accounts prep and independently examining. You need to have a separation. Whoever's doing the bookkeeping needs to be different to whoever's examining the accounts. And there are other considerations. I would go back to CC 31. So, it's a relationship. We want to ask our independent examiner for a checklist. Tell me what you want to see, and then I get it all nicely lined up for you. I make a file that will back it all up. I'll have a list of all the equipment and other assets, any year-end creditors or accruals if I'm doing accruals accounts, any debtors or prepayments, listings and calculations. I'll have the bank balances and copies of statements, any fund, grant notes, and I'll make sure I know where everything is, all the paperwork and all the trustee minutes, so that when the independent examination starts, I am good to go. I'm not going to slow it down by finding this stuff in the week and risk an increase in fees. I'm going to get all my ducks in a row so that when it happens, we are all prepared. And then it's really quite painless. These are the two bits of guidance that we really invite you to go and read. The Independent Examination of Charity Accounts Guidance for Trustees. And you might as well read what the independent examiners are asked to do by the Charity Commission. Understand both sides. That doesn't hurt. What we're aiming for is a clean report. And if it's a receipts and payments account, it will say something like, I've completed my examination. I confirm that no material matters have come to my attention in connection with the examination, which gives me cause to think any material respect, accounting records were not kept and the accounts did not accord with the accounting standards records. I have no concerns and have come across no other matters in connection with the examination which needs attention. So that's an example of a receipts and payments or independent examiner's report. I would benchmark that against yours. And this is an example of an independent examiner's report for an accruals account that's clean, and I would benchmark that against yours. And essentially it says the same. Then they would never say we are 100% confident everything is 100% fine. It's the I haven't found anything approach. It's a negative assurance. And so the question is, do you have a clean or a qualified report? And a qualified report sounds like a good thing, but it's not. It means that there are problems. It's not a clean report. There are problems with it. And it can have a negative impact on fundraising. An examiner qualifies the report on the basis that, you know, the accounting records aren't very good, they're not complete, they're missing, they're not in the required format. It's all written down on the back of a bar mat or whatever. That probably isn't okay. You want a nice, clean bookkeeping system, whether it's Excel or one of the accounting platforms. Or, you know, you've spent money on things you shouldn't have, or you just can't explain anything. And so I would use the independent examination process as an opportunity to do some really great housekeeping. We should all be on top of all the numbers. We should know what's going on. And this is a really great opportunity to reflect on your systems, not necessarily to do it all. We should have been doing it during the year, but this is a really nice opportunity to reflect on the systems and processes that we've got. And is this an opportunity to improve them or enhance them going forward? Now, when we file the annual return, we are invited to check a box disclosing whether our accounts are qualified or not. And at this point, we're so proud of the accounts and so relieved to get to this stage. We say, yes, they're qualified, because we quite fairly interpret that as being, have they been done by someone who is qualified? But we now know that a qualified report is not a good thing. And so if our accounts have not been qualified, if we have a clean audit report, we do not check that box. And if you're in any way uncertain, just check with your independent examiner or accountant. And if you have checked it by mistake and your accounts are fine, but you said they're not fine, then phone the Charity Commission and they will uncheck it for you. They are super helpful. Right, where do we find an independent examiner? Well, the best place is probably similar networks, similar organisations in your network. Ask around. There's also the Association of Charitable Independent Examiners, wonderful. And you can ask local community accountants or your CVS. Remember, cheap does not equal value for money. So I think, as with all things finance, it's an investment. Once you've done your accounts, you've got them independently verified, everyone's happy, then you need to submit them to the Charity Commission with the annual return. So that's a mandatory annual form that keeps the regulator register up to date. It includes charity details, financial information, governance information, and compliance details on policies, etc., etc. There are deadlines for this, and we need to file them on time. Get late filing is just a bit of a red flag, if I'm honest, and it can really have an adverse effect on your fundraising. Just, there's no need. We've got a whole year. Well, no, we've got a whole 10 months or 9 months. We'll talk about that in a minute. But just get your ducks in a row really quickly. Go for an early filing. Demonstrate that you are really, really on top of everything. So make a note of your deadline, diarise it. It will always take 4 times as long as you think, so put in your false deadlines. And make sure you can access your regulator account. It's quite easy to get locked out, and it can take quite a while getting back in. So again, you're not filing the night before and then thinking, where's my activation code? You're doing it a few months before, thinking, oh, I've forgotten it, no problem, I've got lots of time to get another one. The deadlines, broadly speaking, in England and Wales, if you're registered with the Charity Commission, you have to file within 10 months of year end. And if you are registered with Companies House, that would be 9 months of year end. But again, you will go back to the primary guidance and make sure you know when you have to file. And Scotland and Ireland, as you can see here, are slightly different. I'm not going to read them all out. This is what the Charity Commission register looks like for England and Wales when there is late filing, lots and lots of red. We don't want that. We want the big green tick in the top right corner, reassuring the reader or the researcher that we are up to date, but we don't want any of the red late filing. We want it all to be on time. And there's useful links there that you can get if you download the slides. And I think that's a whistle-stop tour. There's so much more we could say, but you know, who wants to sit through a video for hours? I would always go back to the primary guidance. The key takeaways: you've got to do a trustee's annual report and accounts, you've got to get them verified or scrutinised, and you've got to file them with your annual return. And then that becomes a public postcard to the world of your financial position. So take care around the financial storytelling and what you're putting out there. And just keep checking back with the Charity Commission, because the thresholds change and the regs change. The process is a bit can get a little bit complicated, it seems. So just to remind you, you draft the annual report, you make sure the bookkeeping records are up to date, you draft the annual accounts, you send them both for external scrutiny to the independent examiner, you agree any adjustments they might suggest, they get formally approved by the trustees. The independent examiner then approves and signs a report. And then the accounts are approved at an AGM if you have one. And then you file the annual accounts with the trustees' annual report in the Charity Commission when you do the annual return. And it's 10 months deadline for Charity Commission and 9 months for Companies House. Try and get the process wrinkle-free. What to look for in the numbers? Well, on the closing balances, you're looking to see if the total funds are positive or deficit, and if you're going concern. Can you pay your bills as they fall due for the next 12 months? Are assets greater than liabilities? You look at your restricted funds. What are we taking forward? Is that right? You look at your unrestricted funds. How much of these are reserves, and is that okay? Is that in line with the policy? You might look at the balance between restricted and unrestricted funds and see if you can rebalance. We all want more unrestricted funds, really. That's where reserves sit. Was your income higher than expenditure overall? And if you had deficits, what was driving them? Was it timing? Was it underspends? Was it overspends? Are there problems that you then need to take corrective action if you're not going to hit the iceberg? The balance sheet never gets enough love. I would look at, do you have debtors? What are they for? Are you really going to recover that? Do you have creditors? What are they for? Have you already paid them? It's just been miscoded. When are you going to pay them? Have you got enough cash to pay them? How much have you got in cash? And in the notes to the accounts, have you listed all the funders? Have you is the salary note accurate? Is the movement in funds note? This is the long one at the back that says what's left on each restricted grant or fund. I would check that. I think that really bears close scrutiny. I want to make sure that I am not hamstringing myself by putting out information that just might be wrong. That's not uncommon. I would really look at the movement in funds note to see what's left on all the restricted funds and make sure that's what we think is left. Is the reserves policy up to date? How much do we have in reserve? Is it enough? Is it too much? Think about the resilience. Think about the planning. Year end is a great time to pause, take stock, think of the resilience planning, the risk management. And I would start as soon after year end as possible. I'd go for a Q1 audit. No one ever wants to, but I would. Always leave more time than you think. Build a relationship with your independent examiner. They can be a really great source of support. Take care over the trustees' annual report, finance sections. Think about what you're writing. Be intentional. Understand the numbers and query them where you have to. And make sure you're following convention. You look at the guidance, look at the templates, be compliant, and don't file late. Not a happy place to be, and that's one of the common pitfalls, that we leave it too late, then we file too late, or we prepare accruals accounts when we could prepare receipts and payments accounts, or they're just not SORP accounts. There's no columns. We haven't even tracked funds. We haven't checked the numbers. We have given it all to someone else. They've done it. We assume it's right. They've only done it on our behalf. We do need to check, and that's it. So good luck with your year-end process. We hope this very brief rattle-stop tour is useful. What's more useful is the guidance on the Charity Commission, of course, and what's more useful still is having a good accountant or treasurer in the mix that can really hold your hand through this. Okay, good luck, folks. Onwards and upwards.